Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. RBI's MPC outcome is out and the rates are kept unchanged. What's also unchanged were the markets, which didn't have much of a reaction apart from a slight weakness in the rupee. Overall, currency markets have remained range with no major directional moves. Good morning, JK. Your thoughts on MPC as well as the recent moves by the market?
Good morning, Swaraj. I would say that the RBI policy event was kind of a tepid event and nothing surprising came out of it. Policy rates unchanged, but some people had expected the stance to change into one of neutrality on the liquidity, but that was not to be. Probably RBI is mindful of more liquidity flowing into the system as the fiscal spending increases towards the financial year end, as well as when we head into the election period. That's why they have been very cautious on maintaining the stance. Slight surprise could have been on the growth picture, where RBI has projected even for FY25 at 7%, and that is higher than what most other analysts have been indicating. We also had some indication about relaxation on gold hedging for the Indian corporates through IFSC. We are awaiting the guidelines in this regard. Other than that, there was nothing much, but market reaction, rupee, as usual, did not have anything to take away from the policy. But post policy, we did see some sell off in the domestic stocks. It could be pinned down to markets trading near the highs just before the policy, and also some disappointment about possibly easing out the liquidity stance. So that could have been, but I think we are all stay well within the range, both for the rupee as well as on the stock index, which is ranging in the highs, as well as uh, the bond yields, which now moving between 7.04 and 7.09. But on the global markets also, as you said, mostly the dollar has been very rangy, except that we did have some good movement in the Japanese yen yesterday after Deputy Governor of Bank of Japan made a statement that the central bank is unlikely to raise interest rates aggressively, even after ending its negative interest rate policy, provided good reason and that provided good reason for the yen bears to sell currencies against the host of other currencies and take the dollar yen through 149 with ease. Markets had been cautious about his stance, but the tone appeared to be quite soft. And he effectively said that even after removal of negative interest rate policy, bank would adopt a slow approach for further moves. And the recent data from Japan indicating moderation in inflation has also encouraged BOJ to be more patient. Now, his statement was taken as quite dovish, and that actually seen in the bond yields also. 10-year JGB bond yields, which had gone to 0.75 earlier, fell to below 0.7%. But the dollar strength on the yen did not really percolate to other currencies. Euro and GBP remain well supported at 1.0720 and 1.25 respectively. And the reason is that along with the rise in the US, we are also seeing good support for the yields in Europe as well as in Germany. So it's all-round rise in yields. So that's keeping the dollar range bound. Yen alone moving up is because, rather yen alone weakening is because yen is being sold once again against the high yielders. Of course, as we reach 150 and beyond, talks of currency intervention can also emerge, but that is something that we need to wait and see. Another aspect of the dollar market is the Chinese one that has closed above 1.20 even as China broke into a long lunar holiday period. Now, stock markets had risen more than 7% in the last 3 days after government expressed its seriousness about handling the sell-off in the equity market, which is trading at 5-year lows. But nothing came about as a decision, and with the holiday period in between, perhaps one should wait for some more time when they can come out with stronger measures. While USD yuan stays above 7.20, I don't think too much weakness also will be seen, because the earlier instances, PBOC has been seen active in the offshore market also to avoid any further weakness in the yuan. As far as the gold is concerned, the metal has been moving in a range between 2005 and 2055 for quite some days now. And what's encouraging for a bullish view on the gold is that it has not fallen despite rise in the yields in US and other countries. So to break out of this range, of course, it will look forward to the dollar index as a directional move. As far as the data is concerned, yesterday we had the jobless claims data that came lower by around 9,000, 2,17,000, and expectation was 2,18,000. Continuing claims also falling. Once again, this jobless claims data really did not affect the big tech sector job cuts that has been reported from the US. So that's something reflective of the fact that even with that, enough number of jobs are available, and there's people who are moving out of the jobs are able to find one very easily. So that's the situation. So it's not a something that would encourage the rate cut people. Also influencing the market was some statements from Fed's Barkin that saying that he won't take too much signal from 1 month's data. Probably he was referring to the blockbuster jobs report that we saw last month. And he has also said that he is cautious about the accuracy of the numbers at the turn of the year. So it's very significant. And finally, he also mentioned that Fed looks at a host of factors like consumer sentiment, willingness of consumers to dip into savings, and loosening of the financial conditions, all of them contributing to inflation rate. So nothing to conclusive about, but it keeps the market still cautious about now continuing with the overly expectation on the rate cuts from the Fed. We're still at 62% probability of a May rate hike, and the overall rate hike for 2024 probability is at 1.25%. So that's it. And as far as the data for the day is concerned, we don't have much. Again, it's a very light slate that we have. Canadian jobs number is one that can be looked at to determine how their policy will move going forward. Asian market is very quiet because China is also on a holiday. But one interest can be surrounding the CPI annual revisions that will be announced tonight. So this will, announce the revised numbers based on seasonal adjustments for the past 1 year. If there is any major deviation, that could slightly impact the bond market and the currencies. Otherwise, expect another quiet day today. Thank you.
Thank you, JK. And just quickly summarizing, starting from the RBI policy event, it was nothing surprising, as JK mentioned. Policy rates unchanged. Even the stance of withdrawal of accommodation was kept unchanged. What was a bit surprising was the FY25 growth, which is projected at 7%, which is higher than what most analysts are expecting. So that was on the RBI policy front. On the global markets, currencies have been rangy except for the Japanese yen. Chinese yuan has been trading on the weaker end despite China being on a holiday period. Yields have been rising for most of the major countries, and gold has been rangy. So one positive, which of course JK mentioned, is that despite the rise in yields, gold has not fallen below the current range. So that's one positive for the gold bulls. Tonight we have the CPI revisions based on the seasonality effects. So that's just like one major data point that can affect the markets. That's it from us today. Thanks for listening. Have a very good weekend. Tune in on Monday for the latest in the financial markets.